For years, Atlassian was pretty much the undisputed king of the software development world. You know, a Wall Street favorite, the engine behind millions of tech teams. But today, the company is at a terrifying crossroads, staring down what could be an extinction-level event, all thanks to AI. So the big question is Atlassian a casualty in the making, or is it one of the biggest deep value opportunities in tech right now? Let's dig in and figure it out.
Okay, let's start with the number that says it all. -75%. Almost 75%. That's how much value has been wiped off Atlassian's stock since its peak. I mean, that is just a catastrophic collapse for a company that, on the surface, seems to be doing everything right.
And that really gets us to the central mystery of this whole explainer. See, this isn't a story about a company that's failing today. It's about a market that is absolutely terrified of what it might become tomorrow. So how on earth can a business that's still growing so fast be valued like it's about to go extinct? Just look at this graph. It shows this massive disconnect. The green line, that's the broader tech market, just soaring on all the AI hype. And then there's Atlassian in red, just falling off a cliff. The market isn't just selling Atlassian, it is actively running for the exits, creating what you see right here as the repricing gap.
And this is the crucial point. This isn't about a bad earnings report. The market is looking way past today's numbers and basically pricing in a future disaster. That incredible valuation, that SaaS darling status that had it trading at, get this, 217 times its book value, it's just gone, evaporated. The market thinks AI has fundamentally broken its core business.
All right, so to really understand this level of panic, we have to break down what I'm calling the four horsemen of the Atlassian apocalypse. These are the huge existential AI threats that are fueling this massive sell-off. Okay, threat number one. This is a direct attack on their core business model, the seat-based implosion. Think about it. Atlassian's entire revenue model is basically a tax on human headcount. You pay per user, right? Per seat. But what happens when AI coding agents make every single developer, say, 10 times more productive? Well, companies don't hire 10 times more people, they hire fewer. And fewer developers means fewer paid seats. It's kind of crazy, but their revenue is literally tied to human inefficiency. Threat number two gets even more fundamental. It's simple. AI agents do not use Kanban boards. A tool like Jira is all about managing human friction, coordinating teams. It's this visual, manual process of dragging a ticket from to do to in progress to done. But an AI agent, it doesn't need a UI. It just gets a command, it writes the code, and it pushes the fix. The entire human-centric workflow that Jira is built on could just, become obsolete. And then you've got threat number three, the new predators. The competition isn't some other project management tool anymore. Nope. It's the AI giants themselves. We're talking OpenAI, Anthropic. These are the companies that built the foundation models, and now they're moving up the stack. They're building enterprise agents that can learn entire workflows. I mean, the quote here says it all. OpenAI has literally pitched investors on the idea of replacing platforms just like Atlassian. And the final threat is this really cruel irony. Even as Atlassian is scrambling to adapt, building its own AI tools, big companies are terrified of the new security risks. The danger, as you can see here, is that a single bad email could trick an internal AI agent into executing a command and leaking super sensitive data. This fear is a huge barrier, and it's stalling the adoption of the very tools Atlassian needs to survive. Okay, I know that was a heavy dose of doom and gloom, but if you're finding this breakdown valuable for understanding the massive forces reshaping the tech world, just take a quick second to hit that like button and subscribe. It really helps us keep making these explainers for you. But wait, that is only half the story. The bear case is scary, for sure, but there is a really powerful counter-argument. So now let's pivot and look at the bull case. This is Atlassian's huge, high-stakes bet on its own survival. This graph right here gets to the absolute core of the bull argument. While the stock price has been in a complete freefall, just look at the business itself. The revenue has more than tripled over that same period, going from $1.6 billion to a projected $5.2 billion. What you're seeing is a complete divorce between how the market feels and what's actually happening financially. So how are they fighting back? Well, this is their adapt or die gamble. Atlassian is spending a jaw-dropping 51% of its revenue. That's over $2.6 billion on research and development. To put that in perspective, that is almost 3 times the industry standard. This is not a company that's just sitting back and waiting. They are burning cash to completely re-engineer their platform for the age of AI. And here's the kicker. Despite all that spending, the fundamental business remains elite. An 82.8% gross margin. That means for every dollar of product they sell, almost 83 cents is gross profit. That is simply world-class.
Which leads us directly to this number, $1.41 billion in free cash flow. This is the actual, real cash pouring into the company's bank accounts, even with all that massive R&D spending. So yeah, on paper, if you look at their net margin, it's negative. They're technically unprofitable. But that's a choice. It's a direct result of that huge investment in R&D. The business itself, it remains an absolute cash machine. And what is management doing with all that cash? They're buying their own stock, aggressively. While the rest of the market is panicking and selling, the people who know the company best are using billions of dollars to buy back their own shares. I mean, this is probably the strongest insider signal you can possibly get that leadership thinks the 75% crash is a massive overreaction.
Okay, so we have 2 completely different stories here. A bear case that sees total extinction, and a bull case that sees a deeply undervalued cash cow fighting for its life. So let's try to bring it all together for the verdict. At its very heart, this entire conflict boils down to one core concept. Atlassian is a system of engagement. It owns the process, the workflow. It is not a system of record that holds the underlying data, like a code repository or a Salesforce database. And here's the problem. AI needs data from systems of record to work, but it's designed to replace the human workflows that are managed by systems of engagement. This is their core structural vulnerability. And that brings us to the final weigh-in. On the bull side of the scale, you've got this historically low valuation, incredible free cash flow, massive R&D spending, and huge insider buybacks. But on the bear side, you have those existential threats, seat compression, obsolete workflows, and competition from the AI giants. Right now, the market is betting, and betting heavily, that the bear case is going to win.
So, if you're watching this story unfold, here are the 3 key things you really need to track. First, keep an eye on customer count versus seat count. If they keep adding new companies, but the number of seats per company starts to drop, that's the shrinking signal. Second, R&D efficiency. Does that $2.6 billion actually deliver an AI product that stops customers from leaving? And third, can they eventually prove they have financial discipline by turning that net margin positive? Ultimately, this is a story of incredibly high risk and, potentially, massive reward. The stock is absolutely priced for disaster. If these autonomous AI agents really do take over and the core business model breaks, yeah, Atlassian is in big trouble. But if they manage to adapt, to integrate AI into a new indispensable workflow, the potential for a valuation snapback is just enormous. The only thing that really matters is how they navigate this transition. This is honestly one of the most fascinating high-stakes dramas happening in tech right now. But what about you? What company's future do you think is being radically reshaped by technology? Drop a comment below and let us know who you'd like to see us analyze next. Thanks for watching.